Hey guys, Omar Khan here from Theta Trading, and today I want to talk about what's going on in the markets. What's going on? Why are the markets falling so much? And what to do when this happens? Not to panic, not to freak out. This is not the time for that, and it never will be. Now, I want to make a distinction. There's a bear market and there are corrections, okay? Bear market is defined classically as a 20% retracement in the S&P, okay? The S&P 500. So if it was at 100 and it goes down to 80, you're in bear market territory. Now, that doesn't happen all that often. Since I've been investing, it's happened a few times. It happened in the dot-com era, early 2000s. It happened in 08, 09, housing crisis. It happened during COVID. And it happened one more time during 2022 when interest rates were going up a lot. Now, that's a bear market. Bear markets are generally something that happens because of some economic event, something that leads it. So let's look back at what happened the last few times. Well, in 2022, we had rising interest rates. We had the pandemic in 2020. That caused the governments around the world, the central banks around the world, to print all kinds of money, hand out money to people left, right, and center because people needed to get by. And if you don't have money to get by, well, how do you pay for your everyday goods? It's very difficult. This led to inflation. And how do you combat inflation? Well, you combat inflation by raising interest rates. And that's exactly what the central banks did. Now, when you have high interest rates, that's not good for the stock market. It's not good for the housing market. It's not good for any market. And that's exactly what happened the last couple times. Now, if we go back a little bit further to 2008, 2009, we had the US housing bubble just completely blew up. And that was a much bigger problem. In that instance, what happened was that loans were being handed out to people to buy homes, oftentimes with no credit check, no due diligence whatsoever. A loan for you, loan for this guy, loan for that guy, stated incomes, things like that. It was a disaster waiting to happen. Nobody knew it at the time, but it was a disaster waiting to happen. Now this time it's a little bit different, right? Now we have corrections very often. I'm going to share my screen and show you how often these corrections actually occur. All right, so let's take a look at this chart here, okay? You can see here the average length of bear market and market correction. So let's take a look at the difference. And this is the last 75 years. So market corrections occur about every 2 years. And the average downturn is 14%. And they last about 4 months. So they're very frequent, right? So we had a great 2023, a good 2024, and we were kind of due for a correction. Now, nobody knows when these corrections are going to occur. The difference between a correction and again and a bear market is a bear market is generally something that's um, it's often led by a recession or some catastrophic economic event. So as you can see, going back here all the way to 1949, just a little bit after World War II, we've had 29 corrections. And yet the market has gone up many-fold since then. As you can see here, the closing price was 16 in 1947, and today we're, this 2022, this is a little bit older chart, at the end of 2023, we're at 4,100, and now we're at 5,700. So obviously, you've had a huge correction. So when in doubt, zoom out. Okay? Now, as long as you believe that humanity will continue to move forward and things are not going to change, the world won't come to an end, these become exceptional buying opportunities. Okay? Now, one of two things can happen. Either this can stay as a market correction, okay, which I think it will. I don't think it's going to be a full blown out bear market because what's really happening right now? What's happening right now is the President of the United States, Donald Trump, has implemented a lot of tariffs on Canada, on Mexico, on China, and tariffs are not good for economic growth. They're not good for, they cause inflation, which leads to higher interest rates. That's not good for anyone. People have less money, they have less confidence, businesses are not able to spend and grow. It creates a whole host of issues. So, what does the market do, especially preceding two really strong years in the stock market in 2023 and 2022, 24, sorry? It sells off. And that's exactly what we're experiencing right now. But we're not short-term investors. We're not traders. As much as it says Theta Trading on my hat, we trade to invest. We're looking long-term. And if you're looking long-term, these become the opportunities where you can make an absolute killing. You know, a year, 3 years, 5 years from now, I think the markets will be a lot higher than they are today because we're undergoing some major changes in the economy and technology, namely artificial intelligence. It's going to change everything that we do, and you're already starting to see the the start of that right now. Now, when it keeps going, it will create a lot more productivity. Now, the short term, anything can happen, but look, since 1949, how many bear markets do we have? 13. They happen about every 5 years. So I've been investing, like I said, since the late 90s. I saw it. 01, 0102, 08, 09, and then 2020 and 2022. Now, 2020 was a little bit different. 2020 was because of the pandemic, and it lasted about 6.5 weeks or so. It didn't last very long. So it's, it was a very short-lived, and the market went down by 35%, but it was very, very short-lived. Now, 2022, that was definitely a bear market. You had a big retracement in the Nasdaq, about 33, 34%. Peak to trough on the S&P, we were down about 25%. So we had a big pullback. That's a bear market. But I told you, those bear markets are generally coincide with some catastrophic or negative economic activity. The last one being higher interest rates. We had record low interest rates after the pandemic, because they wanted to stimulate the economy. The problem is they stimulated it too much, and inflation became a problem. We all saw this at the grocery stores and things you wanted to buy and housing prices. Everything went higher. So the governments had to step in, and they had to raise interest rates to slow economic activity down. That caused a recession. Now, what is the fear this time? The fear this time, now we don't have an economic issue this time. These are tariffs. These are induced by us being people, namely the administration of the United States. And we're not trying to be political here. It is what it is. We want to know, what do we do here? Well, what we're doing is we're buying, because this changes nothing long term. Now, if this correction lasts a lot longer, it certainly could. But I don't think it's going to be a bear market. I don't think it's going to be a 20% pullback. Now, we've had about a 10, 11% pullback already in the S&P 500, and about 13 or 14% in the NASDAQ so far. Now, like I told you, classical definition of a bear market is 20%. I don't think we get to 20%. We might, but I don't think so. And the fears are that all these tariffs and this loss of economic activity will lead to a recession. And a recession is, again, not good for any market. That's the fear right now. But I don't think that's what happens. I think this is a lot of talk, and these are negotiating points. Trump says, we're going to slap a tariff on. One day it's on, one day it's off. It's extended a month, it's extended 2 months. This is what's going on right now. So when you get a pullback like this, and your favorite companies are on sale, whatever company that happens to be, as long as you believe in that company long term, this becomes an excellent buying opportunity. This is where people make an absolute killing. So I wanted to share that with you guys, and just to keep everyone away from all that panic and noise. Remember, the job of the media is to scare you. They're going to go out there and they're going to terrify you, and they're going to say the world's coming to an end. It's not. You just saw how much the stock market's gone up since 1949, even since 08, 09, even since 2020, even since 2022. The worst pullbacks always lead to higher gains. The stock market historically has always gone to an all-time high. As long as you believe that still to be a fact, and I do, then these opportunities should be used to buy into your favorite companies at these low prices. Now, remember, ultimately what drives a stock price higher or lower long term, short term, it could be anything like tariffs or interest rates, or a whole host of things, geopolitical events, a war. It could be anything short term. But what drives it long term is the amount of money that company makes or doesn't make. So corporate profitability. So as long as you believe that the companies you're investing in are going to keep making more and more money, then that's a really good sign long term. So what we're doing right now, guys, we're buying. We're going to keep buying because we believe in the future. We believe in artificial intelligence. We believe that these companies will be a lot more profitable in the future. And this simply becomes an opportunity to make a lot of money. I hope you look at it that way. I want to share my thoughts. We'll talk to you soon.